Welcome back. We are now hearing Grayscale is filing for an IPO, going public, as we are now seeing the entrance to the banana zone in the Bitcoin bull run, with Bitcoin reaching new all-time record highs, Ethereum right there behind, along with many other top cryptocurrencies and also lower cap cryptos. We're starting to see the pump beginning. And where are we going? Where are we going to end? Well, let's start right here with Vanguard, which is historically anti-Bitcoin, maybe the largest institutional holder of MicroStrategy. And this, as MicroStrategy continues to buy more and more and more Bitcoin. But as I've explained, this is also not such a bullish thing, because clearly there's somebody on the other end selling, and we are starting to get information and insight into whether there is selling, how much selling there is, and why this actually may be the transition point, like I have been predicting, into Ethereum and many of the altcoins. Because once the Bitcoin narrative exhausts, and it's pretty exhausted, guys, we are starting to see even more resistance the higher we go in the price. This is going to push institutional buyers, smart money, traders into other products and other market assets, whether it's stocks or crypto, which can make them a lot of money. And so we're going to be talking about the banana zone, the transition out of Bitcoin into Ethereum, what's going on with the big institutional players, and much, much more. So make sure you guys are subscribed to the channel. Give this video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. Nothing of what I say is financial advice, although we do talk about investment thesis and strategies a lot on this channel, and that is what this channel is about, being able to create your own investment thesis and strategy. And so let's get right into today's video. So as we've been talking about, right, MicroStrategy is a play on Bitcoin, but it is not a play for regular everyday investors like you and I. This is for the big money. And a lot of people have not been listening to this and continue to go all in on MicroStrategy, even though we know that their stock price is overvalued above the Bitcoin that's underlying. And even the Bitcoin underlying is not going to the shareholders of the MicroStrategy stock. It's going to the actual debt holders. And so there's a lot of people who have no idea about any of that, and they're just buying into MicroStrategy thinking it's the end all from an investment perspective. And while it may have been and may be during different points in the cycle, we are now at all-time record highs in terms of the MicroStrategy price, all-time record highs in terms of the Bitcoin price. And like I've stated, the narrative is exhausted, right? For retail, this is not a stock for retail. You can actually go to the NASDAQ website and look at who the institutional holders are. Largest holder is Vanguard with 20 million shares. That's currently around the same amount of shares that Michael Saylor has, right? And just a few years ago, he sold about 20 million shares that he owned personally back then as well. Who was he selling it to? Wall Street. Who's he selling the shares when he's selling, more shares to buy more Bitcoin? Wall Street. Wall Street continues to increase their shares in MicroStrategy. Why? Because maybe they don't want to hold the Bitcoin. Maybe they want diversified holdings of Bitcoin. And at the end of the day, if you think about the amount of money MicroStrategy is raising on a regular basis to buy Bitcoin, it's not coming from everyday people. So this should be no surprise that institutions are buying Bitcoin, maybe not directly, but indirectly through MicroStrategy. And while MicroStrategy is buying the Bitcoin, somebody is selling the Bitcoin, as we've been discussing on this channel, right? 80,000 Bitcoin whale just sold 40,000 Bitcoin worth $4.7 billion after buying it for $32,000 14 years ago. Now, obviously, this may be an early Bitcoin miner, so they may not have actually purchased it. They may have earned it. But it is very interesting because, last week or the week before, when we heard about this 80,000 Bitcoin being moved, there was a lot of people who were saying, oh, well, they're moving the coin to let you know that they own the coin and that they're going to hodl. And it's like, what? Why would they do that? I told my viewers it was a warning. It was a warning that, number one, they can sell their coins. Number two, they probably were going to sell their coins because they were moving the coins. Number three, It was also an indication that there's a lot more liquidity out there than people are realizing or admitting or, I don't know, putting in their investment thesis. There is a lot of Bitcoin out there. I mean, even on my recent videos, I've told you guys, like, we have 20 million Bitcoin in existence. Even if 5 or 6 million of those are gone forever, right? That's 14 million coins. Still a lot of liquidity, right? Especially because Michael Saylor, MicroStrategy, and BlackRock, they only own about 1 million Bitcoin. So that's 14 million to 13 million, plus Satoshi's wallet, another 1 million. So you have 12 million Bitcoins still in existence and still circulating out there. And people like you and I are not holding 80,000 Bitcoin, right? And so the people who are holding 80,000 Bitcoin, they're going to start to offload because they see that there's liquidity coming in and Wall Street's willing to buy, and they may not be willing to buy in the future. I mean, people who say no, Cryptoviser, they're going to keep buying forever. Maybe they won't. I mean, if you think about SpaceX and Tesla, they only bought once. They haven't bought on a regular basis. And if you think about retail investors, when they bought in 2020 and 2021, once they got wrecked by FTX, Celsius, Voyager, 3 Hours Capital, BlockFi, a lot of these people never got into crypto again and may never be into crypto again. And so there may not be exit liquidity as much as the thesis is that Bitcoin's going to keep going up. If they can sell half of their holdings for $4.7 billion, even after taxes, $2 to $2.5 billion. I think that's a pretty good taking. And so, yeah, the mysterious whale, not maybe looking to cash out, is looking to cash out, as they all will do. And that brings us to crypto-focused Grayscale, confidentially filing for a potential US listing. And why are we now seeing them do this, right? I want you to remember, we had a lot of IPOs already, and we have a lot more IPOs that are potentially on the table, right? Gemini IPO, Grayscale IPO, all these treasury companies doing, SPAC mergers. These are all effectively IPOs for the crypto industry. And again, when they're entering the market, that's telling you that liquidity is there. Because if there's no liquidity, this never happens in a bear market, right? You don't see these companies filing for IPOs in a bear market. Why? Well, because there's no liquidity. They're going to start up their company and it's going to crash because there's no liquidity in the market. There's no volume. And so this happens every cycle. Right? Michael Saylor began to buy Bitcoin in 2020 at the beginning of the bull run. That's when he did it. And so this is another indicator that exit liquidity is there. And the further we go, the more liquidity is drying up. And so that's why you're going to see these companies doing it more rapidly. And that's what we're seeing, right? We're seeing Nakamoto, Matador, ProCap, all these different Bitcoin treasury companies, now Ethereum treasury companies, and some Solana treasury companies, and some XRP treasury companies. It's all trying to capture that exit liquidity. And by the way, what's even more interesting is there's going to be even more exit liquidity captured as the altcoin ETFs are launched, right? Because as I've said, I personally think that these ETF launches for most of these cryptos, it's going to be a bearish event, at least in the shorter term. But it's just another indicator. Once they launch, there may be some volatility in the price at the beginning, but I think generally speaking, over the following 6 or so months, it's going to be, for the most part, bearish for those cryptos. But that's final exit liquidity as well, right? And so once all this liquidity dries up, where's the next pot of liquidity coming from? And I'm not saying that like liquidity is drying up. I'm just saying liquidity in these areas. So people are going to say, but Cryptoviser, just because crypto goes down doesn't mean that people can't make money in the markets. That's correct. But it may not be in the crypto markets. It may be in other categories, maybe AI or automation, something that has nothing to do with crypto. And so there will be money to be made in these markets, but where is it going to be? A lot of people are going to be staying in crypto because they think that their crypto from the last cycle is going to get to all-time record highs because Solana did and Bitcoin did. But it doesn't mean that all the altcoins are doing. I mean, Ethereum still hasn't reached all-time record highs, but there's still opportunity to arbitrage this market. And Grayscale products are one of those things. On the Grayscale website, they now very clearly list out what the market price per share is and the NAV per share. So this gives you a very like doing the research for this is really not that difficult, but most people won't do it. Many of you are doing it. That's why it's important that you guys give this video a free thumbs up and make sure you guys are subscribed. That way you never miss a new video. We have a whole portion of this video coming up about Ethereum and the Ethereum ecosystem and kind of where that is going, because a lot of Wall Street money is pushing into Ethereum and layer twos and Ethereum adjacent chains. So stick around for that in just a few minutes here. But before we go there, if you are looking to arbitrage this MNAV, we hear a lot with MicroStrategy trade. Really, Grayscale is a great opportunity here. You can see that the market price per share, NAV per share. So when you see that the market price is lower than the NAV, that is basically typically a buy, especially if you're arb trading. Because, for instance, let's look for one that looks good. Well, the Bitcoin Cash Trust is imbalanced. Look at the Chainlink Trust. You're paying $35.90 per share for this Grayscale product, but in the share you're only getting $14, so you're paying a premium of over 100%. Does that make sense? And so this is the same thing when you're talking about the MNAV for MicroStrategy, right? The underlying Bitcoin is about 50% of what the share price is, which is not a trade, not a good trade. But a lot of people are playing that trade. You can see here the digital large cap fund, which is kind of like the blended ETF. It has some of the top cryptos inside of it. This is a negative NAV. So you can see that the market price per share for this is about $52.50. But in the share, you're getting about $55.22. There's about a $3 arbitrage right there. That's not that good of an arb, but it is an ARB. Filecoin Trust, this is a great example of a double as well. $4.44 for the share, $2.30 is what you're getting. The Ethereum Classic Trust is a good example of a 50% discount, because you're only paying $9.50 for the share, but you're getting about $15 inside the share. So this would be a great arbitrage play, right? You buy the share, and hopefully the premium to the discount corrects, or this fund becomes an ETF, because if it gets converted to an ETF immediately, almost the market price will match the NAV. And so this is a great way that we've previously traded on this channel. Haven't really done the arb trade here in quite a while, because Grayscale products just don't trade as lucratively as they used to, because now we have all of these ETF products out there that are able to do that and keep the NAV at 1-to-1 with the share. Anyway, moving right along into some other cryptos, Dom from the Internet Computer Protocol, Dfinity, chief scientist and founder of Internet Computer Protocol, he said, self-writing internet is one, app creation is natural language conversation. Apps update without risk to the back-end data, and apps are secure and resilient and sovereign. There was a browser game creation, easy to vibe code, but caffeine can elevate Web3 esports. And this is a screenshot from one of the developers in Internet Computer Protocol ecosystem, who was able to effectively write, utilizing caffeine AI, a 3D helicopter flying game, and basically code and talk to the AI to refine the code and refine the game and get a flying game here. We've already seen multiple demos of this being done. I'm really hoping we see more videos being published of these demos. That way we can highlight this on the channel, as well as more people have a better understanding of how these things actually work. But you can see here in the actual text box, the AI is writing to the coder, and he said, helicopter is flying backwards, but it works. If you turn it around, it would be perfect. And then the AI says, I'll turn the helicopter model around so it flies forward in the correct direction, with the nose leading and the tail rotor at the back. That should make the flying experience feel better. I mean, it's taken Rockstar Games over 1 decade, and we still don't have Grand Theft Auto. Okay, AI did this in probably about 40 seconds or 1 minute. I mean, we are entering a whole new world with AI, and it's not just involving crypto. I mean, this is one iteration of AI. And what I want you guys to understand is like the thing with Internet Computer Protocol is they're developing this technology, which is great, but the AI is not really the game changer here because there's a lot of different programs that can be coded to do similar things to what Caffeine AI is doing. And also, Caffeine AI is not the on chain model, right? It's not on chain, but what it's doing is it's deploying the dApps on chain. It's deploying the dApps on the internet computer. And the internet computer is hosting these games, right? And so the AI is really just the implementer of these dApps for the ecosystem and to make coding and all of this way easier. But again, these kind of coding programs are not specific to internet computer, right? There's other coding programs out there that can code games and stuff like this. I've seen Grok and Gemini or ChatGPT, one of the two, creating games as well. Maybe they have more intricacies or better resolution or whatever, but they can all basically do it. Where the internet computer comes into play is internet computer, the network is decentralized. The network is like a cloud computing network. And this is different than a lot of other programs, right? So for me, yes, the AI, being able to stay on the AI narrative is crucial for internet computer. And internet computer is the only blockchain and the only cloud, like the cloud storage solution, I guess you could say, that is computing, that is utilizing AI at this level and that it's built for these type of things, right? And so it's very exciting to see. And as you guys know, there's a lot more that we're going to be seeing in the coming days and weeks about the self-writing internet and, internet computers' involvement here. But we have to really remember that internet computer, their top level selling point is that they are a decentralized global computer cloud ecosystem that can compute, it can host, it can store with a blockchain effectively managing it, right? The AI capabilities are like a cherry on top. It's even better. And if we start to see actual programs being developed and built out on the internet computer ecosystem, which I think that we will. It may not happen as fast as we want it to happen, but I think that we will. And I think that we'll start to see more integrations and implementations. This takes time, as we're seeing, right? I mean, how many years did it take Bitcoin till Wall Street was even interested, let alone buying Bitcoin? And now they're starting to move into other cryptos like Ethereum and the Ethereum adjacent cryptos, which I think internet computer is not necessarily an Ethereum adjacent crypto, but it is definitely in its own category of cloud compute. And so we'll have to kind of wait and see how this whole AI narrative plays out for internet computer. But I am very bullish, very bullish. And I think that internet computer is extremely undervalued when we're talking about a valuation perspective from a market cap perspective of where it is in the charts. I mean, I think that internet computer should at least be a $10 billion crypto, if not larger. And that brings us to Ethereum, the number 2 crypto in the world. And now we're hearing about Ethereum supply shock intensifying with 29% of Ethereum locked in staking as Wall Street is plummeting money into the Ethereum ecosystem, into buying Ethereum, into transferring wealth from the Ethereum holders to, from Wall Street to the Ethereum holders, right? And the Ethereum holders are letting go of their long-held Ethereum. But we're not even at all-time record highs with Ethereum, but we may get there. And these catalysts, like more in staking, more supply issues, more buying from Wall Street, this is how the price goes up. And there are going to be people out there that say, but Cryptoviser, Ethereum has unlimited supply. Now, technically, that is true. Ethereum does not have a cap on their supply, but there are mechanisms in place to keep the supply level, and they have stayed level. The more Ethereum that's transacted on the network, the more Ethereum that is burned through the transaction process. And so the maximum supply, while there is no actual number, where the supply currently is very level to where we were in the previous cycle at about a 120 million ether level. And granted, this may go up over time, but it's not going up at any substantial or noticeable rate that would imply massive dilution as we're seeing in other crypto ecosystems. I mean, some other crypto ecosystems, they're inflating their circulating supply by $1 billion per year. And they'll say, oh, but Cryptoviser, Ethereum has no total maximum supply. And it's like, okay, but your ecosystem's inflating by $1 billion a year. What is Ethereum inflating by? Practically zero. It's so unbelievable how people they act like, well, I'm a great investor, and you don't know what you're talking about, Cryptoviser, because Ethereum, it does not have a maximum supply. And it's like, actually, you're not a good investor, and I would never listen to your thesis even, right? Forget about your investment advice, your thesis, because you're so wrong. Saying Ethereum has no maximum supply with no other context is not only foolish, but it's wrong. Because Ethereum, while it doesn't have a total maximum supply, the supply has barely moved in the last 5 years. And by the way, more of the supply is now moving. And where is it moving? Into staking. While other ecosystems are seeing less and less staking, right? Ethereum is seeing more and more staking. And you can see that right here on the Beacon Chain chart very, very clearly from the 2021 when the merge happened, when staked Ether effectively went into effect, I guess you could say. You can see we're at all-time record highs. It's not even a question. It's not even I can't read this chart correctly. No, if you're saying, all the stuff about Ethereum has more stake than ever. Other ecosystems are decreasing in their stake because people are selling their coins, right? Because they're truly coins. Ethereum is 29% and is burning coins as they're producing them to keep the circulating supply level. And there's still people who are like, but Cryptoviser, but Cryptoviser, it's like, yo, you want to make money or do you want to be poor, right? Because if you want to be poor, you keep investing in these shit coins that have not produced anything, that are their DeFi ecosystem is decreasing, their staking ecosystem is decreasing, their developer ecosystem is decreasing, their interest is decreasing. And this is happening with a lot of different cryptos. It is happening with a lot of cryptos. But at the end of the day, the big money is focused on Bitcoin. They've been focused on Bitcoin this whole cycle, and most of retail, most of people who watch these YouTube type videos, they've been focused on their altcoins. And they've been crying, well, Cryptoviser, we haven't had altcoin, we haven't had alt season. Well, yeah, we haven't. And there's nothing guaranteeing we will. So when I'm looking at the market, it's not like I'm saying I don't hold any altcoins. Of course I hold altcoins, but these are very small percentages of the portfolio. They're a hedge on what if, Wall Street gets bored of Bitcoin and they go into one of these altcoins. But really, we've heard from Wall Street, many different levels. They're focused on Bitcoin. That's it. Very, very small portion is also focused on Ethereum. So that's untapped as well. But other than these two, it's pretty much it. You got a little bit of interest in Solana, a little bit of interest in PP Coin, and a little bit of interest in XRP, but that's pretty much it from the institutional side. And so we have to look at the data, right? I'm trading the market in front of us, not the market that we want. It's interesting because the Ethereum videos that I post, these are the worst performing videos. And that tells me we are on target. We are on target. Because the rest of the crypto ecosystem, they're still focused. They're like, no, Cryptoviser, you're an idiot. You keep talking about Ethereum. Ethereum's not going to do well. We got to talk about Dogecoin and PP Coin and this coin and SWI. And it's like, okay, you're missing the whole freaking point. The point is, we're getting to the final stages of the bull market based on the Bitcoin halving tracker. We are in the greed stage, right? We're getting into extreme greed in a little bit. When this happens, you have to look at where nobody is paying attention, because when they start draining out of their mighty old Bitcoin, right? Because Cryptoviser is wrong. We're going to hit $500,000. He's going to be so wrong and he's going to be missing it. It's like, no, I'm not. When Bitcoin starts dropping, right? They're going to go into other alts. And what are they going to go into first? Ethereum. And so until we see Ethereum move, and you're seeing this happen in the market live, until Ethereum moves, nothing else is moving in the alt space, period. It's not, right? Some of them pump a little bit, but we're not seeing major moves. Ethereum has to break through the the $5,000 level. When that happens, personally, I believe we will start to see the rest of the alts moving higher. But before we get there, we have to understand how we're getting there and understand all the metrics involved. 35, almost 36 million coins in Ethereum's ecosystem are staked. And more of this staking ecosystem is becoming Wall Street because they want a piece of the yield. Bitcoin doesn't yield anything, Ethereum does. Joe Lubin, who is now the CEO of Sharplink, one of the Ethereum treasury companies, he said, as self-appointed representative of the League of Extraordinary ETH Accumulator Gentlemen, I tip my hat to Tom Lee, and Bitminer on this fine acquisition. Keep the vacuum set to the highest pile, deep plush. Basically saying, keep vacuuming up all the Ethereum that you possibly can. Because we just heard the other day that Bitmine Emergent Technologies has acquired 163,000 Ethereum worth about $500 million. And by the way, they are now acquiring, while Bitcoin is at all-time record highs, and you have companies like Anthony Pompliano's ProCap that are buying at all-time record highs, right? You have on the other end Ethereum, which hasn't reached all-time record highs, Ethereum, which has not really had institutional interest or Wall Street interest, and now we're getting it. And it's happening very aggressively. Granted, the amount of purchases and acquisitions are smaller than what Bitcoins are, but it's also a lower market cap. So there is the potential here that we are on the cusp of something very big. Because, again, it's not just one company, it's multiple. Joe Lubin said, I tip my hat to Charles and BTCS. That's the BTCS CEO, for long-running dedication to the Ethereum accumulation and for their recent acceleration. Keep the industrial shop vacuum on high. We all got to mop up the excess Ethereum so supply-demand dynamics are tightly balanced. Effectively telling you what their goal is to vacuum the supply up. He also said Ethereum co-opetition, not competition, co-opetition. Competition makes us all stronger. Coordination makes us collectively better. We are embarking on the era of collective capitalism in which builders or leaders build of, by, and for the community instead of in an adversarial and often exploitative relationship with their consumers or citizens. Collective capitalism is built on the foundation of radically free markets, only possible on a permissionless, uncensorable, rigorously decentralized layer 1 blockchain. And I would agree here, and so does Sam Tabar, who is the CEO of Bit Digital, the Bitcoin mining company that just recently converted everything to Ethereum and is now in a full Ethereum strategy, dumping everything that had to do with Bitcoin. He said the three of us race against each other, but ultimately we are all aligned to a greater cause, to unleash the power of ETH. And that's true, guys. All these companies are doing this at a very rapid clip. And if they keep vacuuming up the Ethereum, guess what's going to happen? The price is moving much higher. And that brings us to Bankless's Ryan Adams, who posted this about the Ethereum report. I think this is from Fundstrat. It says the Ethereum report for Q2 just dropped and it's bullish. 10 insights. One is stablecoin dominance. Now, we've covered this extensively. A lot of people are just like, oh no, Cryptoviser, it's not that big of a deal. The worse these videos perform on Ethereum, the more bullish I'm going to get. And the more bullish you should probably get too, because that means that all these people who are watching all my other videos about Internet Computer, about Cardano, about Avalanche, about Sui, about Banana Zone, about all these other things, they don't care about Ethereum, but Wall Street does. And Wall Street is moving into Ethereum very heavily right now. I mean, let them sit on the sidelines and let them worry about their altcoins, right? Because it appears to me that everybody's just kind of either stuck in their positions or they're waiting for alt season. And it appears to me also that we went from Bitcoin, and now we're going to Ethereum, and then we're going to get to alt season. Or maybe we're not. I don't know. But stablecoin dominance is key. Stablecoin supply on layer ones hit $137 billion, 51% of stablecoins and growing. BlackRock increased their I don't know these two funds. Build. I don't even know that BlackRock has a stable coin. But anyway, we're just going to keep it moving. He also talks about DeFi credit is at all-time highs. Active loans on Ethereum and Layer 2 surged to $24 billion, up 43% quarter over quarter, and nearly 2x year over year. It's happening on Maple Finance, up 300%. We've been covering Maple Finance for, I would say, a little bit over a year now. Because there's been a lot of changes to my Maple Finance, and they've been kind of aligning with the path that Wall Street wants it looks like. And they also rebranded, I think, to Syrup, or from Maple to Syrup, something like that with their coin. Anyway, Euler Finance and also Aave. Aave we've also covered extensively. I think there's a lot of very interesting things occurring in the Aave ecosystem from an institutional level. We've seen a lot of institutional interest, including from World Liberty Finance, the Trump organization, into the Aave crypto. And we've seen massive, massive growth in this crypto. Again, while everybody's focusing on PP Coin, Aave has been performing. It's one of the best performers in the entire cycle so far in terms of actual consistent growth. Right, we went from the bear market $80 all the way up to about $380, came back down to about $130, and more than doubled since then. And the trajectory so far continues to look like it's going higher. Now, is it going to keep going higher? I don't know. But why is Aave moving when the rest of DeFi ecosystems are not moving at that level? I don't know. Moving on, real-world assets are coming on chain. Real-world assets on Ethereum's Layer 1 surged 50% in Q2, hitting $7.5 billion. Real-world assets, some big topic this cycle. And what about demand for Ethereum? It would appear demand is low, but on the back of tariff lows, there's strong institutional demand. Ethereum ETF assets under management is up 20% quarter over quarter, now holding 4.1 million Ethereum. That's 3.4% of the total supply already held in ETFs. So institutions are accumulating, obviously. And then they talk about treasury demand skyrocketing. Q2 saw a 6,000% quarter over quarter increase in Ethereum held in Ethereum held in treasuries by public entities. Obviously, we know Bit Digital over 100,000 Ethereum, SharpLink over 200,000 Ethereum. We just covered Tom Lee's company, over 140,000. So there's a lot of institutional interest, right? And the Ethereum supply is structurally capped, as we just talked about. Circulating supply barely budged Q2. 120.94 million is up 0.18%. So again, anybody who's telling you that Ethereum supply is not capped and that's an issue, they're lying to you, and you need to block them and stop listening to them because they are intentionally trying to mislead you, probably because they have a coin to sell you, right? But ignore them. People on this channel that say that, blocked instantly, because we don't have time for the low IQ nonsense, right? Oh, but Cryptoviser, the Ethereum supply is not capped. It's like, yeah, it's not capped, but it's not moving. So what are you bitching about, right? Anyway, you guys kind of get the point on that point. Ethereum is on chain. 43% of the ETH supply is locked in smart contracts, a huge structural demand base, a productive store of value. Obviously, it's being used for staking. It's being used for DeFi as well. Ethereum on centralized exchanges just hit 16.4 million, the lowest since 2016, right? So a lot more in cold storage or not on exchanges, right? In DeFi, in staking, which is good. And he keeps going on and on about all the different cases for the Ethereum being in a bull run, right? ETH is undervalued versus the history of where it should be in the cycle, which I agree with. Supply is constrained, institutional and ETF demand is rising, and DeFi activity is surging. And so for me, the opportunity that is in front of us for Ethereum, I think is unlike any other that we've seen so far in this cycle. It's very clear where money is shifting. I don't think that the market has reacted just yet, but it will. And by the time it reacts, if you're reacting when the market is reacting, it's too late. And there's going to be a lot of people that do this, right? They're going to keep saying, no, Cryptoviser, Bitcoin, 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 Bitcoin. Or some altcoin like PP Coin, and then they're going to see that money is starting to flow to Ethereum, and we potentially are going to reach a point where Ethereum is going to, like overnight, go, $4,000, $5,000, $6,000, and then you're going to hear about it on every news station, all over social media. Everyone's going to be talking about it, and everyone's going to be going to buy Ethereum. But at that point, it's too late, guys, because they are the exit liquidity. Now, I don't know how high the price is going to go. We've talked about this before. A lot of people are calling for a $10,000 price. I don't know that we're going to hit that because so many people are anticipating that. All-time record high was about $5,000 or $4,500. We haven't even hit that yet. So could we go above for $5,000? Of course. Is it guaranteed? I don't know. I think the higher we go, there's going to be definitely a lot of profit taking, and also a lot of structural pressure. But if we continue to see more companies buying in, more companies accumulating large quantities, it could be interesting, because most of the transfer of ETH right now from institutions, it appears, is coming through private sales. It's not happening on the open market. But eventually, I think it will, and I think some of it will occur on the open market, but maybe not. I mean, I think most of the Bitcoin that's being purchased by these companies is happening through private sales. I don't think that most of the coins are being purchased on the open market. And that's why we haven't really seen the Bitcoin price move, because we should see it move more, right? When they're buying, billions and billions of dollars of Bitcoin, but we're not. And I think a lot of that is because of these private sales. It's just like me and you. I say, okay, I'll sell you my coin for this in one transaction, because me selling a large quantity, like 80,000 Bitcoin, like we talked about at the beginning of this video, it's not very easy to get rid of 80,000 Bitcoin, right? Because you can dump the price just by putting that on the open market. So if they do those sales, right, and they say, okay, MicroStrategy, you buy these from me, I'll sell them to you, it's a deal, and then they just transfer wallets. So that doesn't really have an impact on the price in the market. That's the only real structural issues that we're potentially up against with Ethereum. And if Ethereum moves, the alts are going to move substantially, and specifically the layer twos, in my view, like Polygon, like Arbitrum. Arbitrum has already started moving based on our Robinhood announcement, but I think it's going to go much higher. And so now we're also hearing that Nexo is enabling seamless processing on Polygon. And so what is Nexo? Nexo is the premier digital asset wealth management platform in the UK. And effectively, I think I pulled up, yeah. Effectively, it says groceries, flights, and weekend plans in 2024. Stablecoins accounted for 65% of all Nexo card debit spending. They're quietly going mainstream, becoming the default currency for everyday life. And so obviously it shows that Nexo allows stablecoin payments through their card. And so Alex, who is a developer on Polygon, he said, there's a great report on Nexo Card. I did some research to understand the success of the Nexo Card, as many analysts are highly praising this card, especially in the European Union. The main feature is, of course, the choice between debit and credit, and support for a large number of blockchains. Among the key points is a 72% increase in the use of credit mode in 2024, which reflects the trend users preferring to borrow against their crypto, especially stablecoins. Keep in mind, outside the US, I think debit is more popular than credit. In the US, credit is more popular than debit because, everybody's in debt. Not everybody, but most. So the Nexo card allows the use of stablecoins, including Tether and USDC, for credit mode transactions. This allows users to spend funds backed by stablecoins without having to sell them, which believe this person is very convenient. Nexo customers have been increasingly using stablecoins, especially in 2025. A striking example is the stablecoin inflow to Nexo via Polygon chain. In Q1 alone, Nexo received $650 million in stablecoins on Polygon. Think about that. One credit processing company, $650 million just in one quarter of this year. This is in line with the analytics on Nexo Card on Polygon, where Q1 of 2025 was the most popular active period for Nexo. An interesting fact from the report is that Nexo notes significant use of the crypto card by wealthy individuals, especially for travel, with examples such as financing business class flights and private bookings. And this is pretty obvious. I mean, people who are using crypto credit cards or debit cards, these people probably have a lot of crypto, right? It is the next level of like trust fund person, right? Because I mean, you're not going to find like a poor person using stable coins, just not right now, right? They're focused on not being poor, not on crypto and what stable coins are going to do for them and how Nexo can help them. And so this is a different level of spender and of consumer. It's not just like the everyday person, which is important to know, but it's also really big for Polygon because it tells us that Polygon is continuing to be used. Polygon is the back-end payment system, and it's becoming one of the payment processors for the world. And this is definitely going to, like, these blockchains are definitely going to give the credit card companies, the payment processing companies a run for their money. I mean, potentially putting some of them out of business. Western Union. Why do you need Western Union if you can do it through stable coins on Polygon for almost nothing? And Western Union charges 10% on both sides of the transaction. And so we're at this kind of point in the cycle, right, where Bitcoin is getting exhausted. And the altcoins are either going to run or they're not going to run. Everybody's hoping that they run, but that may mean that they're not going to run, at least not at this time. So I don't know. I mean, we're going to have to watch and wait and see. You know, I think the difference between this cycle and previous cycle is that this cycle, everybody thinks it's the previous cycle. I mean, even people who've been in the crypto game for a long time, they're acting the same way, thinking the same way, and executing a strategy for investing the same way that they did in the previous cycle. And it's not based on the metrics. It's not based on the cycle in front of us, the chart in front of us, the market in front of us. The market in front of us is telling us we are very end stages of this bull market. And Bitcoin has already outperformed what a lot of people thought it was going to be able to do. Can it could do more? Of course. But I think that we're seeing the rotation out of Bitcoin into alts. How high it's going to pump them, I also don't know. It's going to be very interesting to see how it plays out. But the bottom line is, for me at least, that we are in the banana zone. And part of being in the banana zone is the banana zone means up only. And that's kind of where we're at. We're not seeing too much red yet. Seeing a little bit of red, a little bit of corrective phases after major pumps. But what is the altcoin ecosystem going to do? Are we going to see banana zone continuance, or are we going to see no banana zone and a lot of disappointed people? I hope we see banana zone continuance. But this cycle is different than last cycle. There's a lot more money involved. There's a lot more people who just want to get out even from last cycle. And so I don't know that we're going to be able to get there, but we may be able to. And so for me, you guys kind of know how I feel, and we're going to be posting these videos every single day on this channel. So make sure you hit subscribe. That way you never miss a new video. But we're going to be talking about where this is going. But I think the next big play is Ethereum. And I think that play is currently underway, right? And like I said, there's going to be a day that we potentially wake up and we're at $4,000 or $5,000, literally overnight. And by that point, if you were not in the trade, entering the trade is the exit liquidity. And you don't want to be the exit liquidity. You want to sell into the exit liquidity. And so you have to make decisions now. Do you think that they're going higher? If you do, are you going to make moves into those positions, or are you going to wait? Because the people who wait, not only to buy, but also to sell, they could get screwed. And there's a lot of people on both ends that are afraid to sell, or maybe not even afraid, just too bullish to sell, or too bearish to buy, or a combination of both. And then they just sit there and don't do anything. But not doing anything is an investment strategy and is an investment decision. So don't think by not making a decision, you're going to be good, because by not making a decision, you're making a decision. And not investing is maybe the worst decision that one can make. But that's up to you and your investment thesis and strategy. Let me know what you guys think about today's video and about all the discussions and about the fact that we now know that the Bitcoin whales are selling their coins regardless of what the maximalists are telling you. Hopefully you guys are doing well. Don't forget to give the video a thumbs up. I'll see you guys on the next video. Invest responsibly, and as always, crypto on.